The US dollar dipped despite the sensible and justified approach of the Federal Reserve towards the monetary policy in light of the corona crisis. As widely expected, the US regulator kept its key rate unchanged at the level of 0.25%. Following two emergency cuts during the last months, it appears the Fed needs time to evaluate the effectiveness of the already taken measures. Besides, the US is still maintaining quarantine restrictions with a complete lockdown of economic activity. After the Fed's official statement, market participants were disappointed by a lack of hints about the prospects of the monetary policy. Moreover, Fed officials refrained from making specific statements and forecasts for inflation and its growth rates. However, the regulator expressed its intention to keep rates near zero. Fed also committed to continuing its asset purchasing program in the amounts needed to support a smooth market functioning. Such measures will remain in force until the economy is back on its feet. The US stock market climbed up amid the Fed statement, whereas the greenback dropped to a two-week low. The USDX index, which measures the strength of the greenback against a basket of 6 major currencies, is again testing the support level at 99.50. Yet the US currency is unlikely to drift lower as traders are awaiting the ECB meeting. Many analysts suppose that the euro may significantly weaken after the results of this meeting. If the single currency nosedives, the US dollar will spike 200 points. The demand for the dollar-yen pair is also subdued. It's mostly trading sideways. The experts of the technical analysis continue to see the signals of the downward trend. They assume that the pair is likely to sink in the nearest future. If the dollar-yen pair tumbles below 106.37, it may well decline to 105.10. What's more, according to fundamental analysis, the yen is also an outsider. The demand for safe haven assets is restraining after today's report of the National Bureau of Statistics of China. The data showed continuing growth in China's manufacturing sector. In April, the PMI index edged lower and even fell to 50.8. A reading slightly worse than the forecast. Still, a figure above 50 points indicates an expansion. This is why traders are optimistic about the Chinese economy. The AUD-USD pair asserted strength against such a background. The pair also managed to reach its highest levels as Australia eased its quarantine measures and the US currency exhibited weakness. However, technical analysis experts recommended traders to refrain from opening long positions as the quote may reverse downward soon. Short deals can be opened when the pair breaks the level of 0.6525 and 0.6446, with a potential decline to the target level of 0.6333. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.